everybody. My name's Greg Taylor. I'm the Head of Financial Solutions at MHA McIntyre Hudson. I just thought I'd give you an update today on the budget from yesterday. I'm sure you've seen plenty of updates on the budget, but I'll give you another overview from the perspective of supporting SMEs. I think that's my focus generally inside McIntyre Hudson. I think in terms of the budget, there was quite a lot in there actually. It was definitely one of the more interesting budgets. Overall, I think my summary at the start would be that there's a lot of big giveaways and short-term support for business, especially around sort of getting through the next few months of support as we open up the economy, which could be perilous. But also, as we saw, and I'm sure plenty of you took a sharp intake of breath that own businesses, some big tax increases potentially coming down the road in 2023 to pay for this support. I think my view on the extra support is welcomed, but I would say, has it gone too far? Did we need the amount of support that we've had to take these schemes through to the end of the year, particularly as restrictions are in theory due to end, or legal restrictions on the 21st of June? So that extra support for COVID support for business is going to cost 60 billion, and clearly that needs to be paid for. In terms of the COVID support and the extension of that support, some new schemes and some extensions of old schemes. So for example, the main business support scheme was obviously CBILS, the Coronavirus Business Interruption Loan Scheme, which had kind of three main guises. So the larger scheme, the large business coronavirus interruption loan scheme, and the bounce back loan scheme, which obviously a lot of people have heard a lot about, and the potential losses on that scheme from fraud. So those will now close after three extensions. They will now close at the end of this month, so on the 31st of March at midnight. So your application for those has to be registered by then. And they will be replaced by the recovery loan scheme. So what do we know about the recovery loan scheme? There's some information on government websites. And this is what I can tell you so far. The scheme will allow businesses continued access to loans and other kinds of finance from 25,000 up to a maximum of 10 million per business. The finance can be used for any legitimate business purpose, including now growth and investment. The government guarantees 80% of the finance to the lender and ensures that they can continue, that the lenders can have continued confidence to lend to business. The scheme officially opens on the 6th of April, so there'll be a short window where there is no support from the end of March this year, so this month through to the 6th of April, and the scheme will close at the moment on the 31st of December 2021. Loans will be available through a network of accredited lenders, which will be announced as per the other schemes on the British Business Bank website. You can borrow the money via term loans, overdrafts, invoice finance and asset finance. So 25,000 to 10 million for term loans and overdrafts, and £1,000 up to 10 million per business on invoice finance and asset finance. Terms, again, these will be very familiar to a lot of you. It's very similar to the old CBILS scheme. So terms of 6 years for term loans and asset finance, overdrafts and invoice finance, a maximum of 3 years. Again, no personal guarantees will be taken on facilities up to 250k. And the borrower's principal private residence cannot be taken as security. If you have received government support under the COVID-19 guaranteed loan schemes, you will still be eligible for support under the recovery loan scheme if you meet all the other eligible criteria. So again, really good support. Hopefully you can cover some of your fixed costs as you open, and obviously some growth costs, because some of you will have been shut for a considerable period of time, and will have costs that you need to cover to open. Or to just continue to function in the early months in terms of working capital. And again, any more information as it comes out, we'll make you aware of it, but be delighted to talk to anybody that wants to talk about that scheme in particular. Other schemes that were extended, furlough, obviously you would have heard a lot about that, extended until September 2021, with employees receiving 80% of their wages and employers expected to pay 10% on 10% towards the hours their staff do not work in July, increasing to 20% in August and September as the economy reopens. Again, that's been a lifeline for many businesses in terms of support, and a real welcome extension, I think, on that one. Did it need to go through to September? I'll leave that as an open question. Cash grants, again, a restart grant, April for businesses opening on the 12th of April of 6,000 per premises for non-essential retail, and 18,000 for businesses opening thereafter, so mostly hospitality. Again, areas that have been really badly affected in terms of businesses and COVID. So again, welcome there. Business holiday rates also extended as well. So again, lots and lots of support. There was other bits and pieces in there as well, but those are the main bits that I picked out. And although the Chancellor's vowed to support UK businesses during the COVID pandemic, it's absolutely the right move, in my opinion. As I've said previously, my concern is that the budget is increasing the risk that we may create zombie companies, which is exactly what happened in 2008, 2009 in the credit crunch, which are only surviving on artificial government support, and that natural business cycle of businesses going bust and and restarting again, and the deployment of capital may be affected by increasing the amount of support that was actually required. I think the really big one out of this budget, which was a really exciting announcement from my perspective, was the super deduction. This is a super positive. I wrote next to my notes. Anything you spend on investing in growth, you can take that money, add 30%, and take it off your tax bill for the next 2 years. That's going to cost the Treasury 12 billion this year and the year after, so around 24 to 27 billion, they reckon, in total. I believe this is, as I said, a super positive for business and will unleash extra investment and growth in the short term. Under the existing rules, just to give you a kind of a scale of what you can achieve with this, a construction firm, for example, buying 10 million of new equipment could reduce their taxable income in the year they invest by currently 2.6 million under the scheme at the moment. However, under the new scheme, the company will be able to reduce their taxable income by 13 million. And then after that, we were hit with the sucker punch, the corporation tax, headline rate jumping massively, potentially from 19% to 25% in April 2023. This now puts the UK only second behind France in the G7 on corporation tax rates. But again, just some clarity on that. If your business has profits of 50k or less, then you'll get a small business profits break at the current rate of 19%. And then that is tapered up to profits of 250,000. It's only on businesses that make a profit of more than 250,000. And remember, tax is only payable on profits after all expenses, including remuneration, pensions, investment reliefs, etc. And the tax won't be payable until 24-25. I think there's a huge amount of uncertainty about how the economy will open and perform moving forward. So by no means is this tax increase, I think, certain to happen. And it's a case of watch this space. I think my conclusion in terms of support for business and the budget would be that the idea of getting business through the perilous next few months is, on the whole, I think businesses will welcome it, and I'd certainly welcome it, the short-term support, but they will certainly raise an eyebrow at the 25% corporation headline tax rate coming down the line. Again, we work with a wide range of businesses here at MHA Financial Solutions, and I'd be delighted to talk to any of you about your funding requirements or what you've currently got in place, if that would be of use to you, or the new COVID support schemes. Thank you for listening.